Hello everyone, I am Dr. Pooja Sharma, working as Associate Professor in Department of MBA. Here I will discuss about the important concept of financial management. As you know, financial management is very important subject in MBA. You have the information about the financial concept, either you belong to the marketing specialization, HR specialization, retail and banking, it doesn't matter, but you should have the basic idea about the finance, and basic concepts should be clear to everyone, to every student. So the first I'll start with the working capital. Working capital is what? It is the concept which is related with the working capital. Means there are the two types of capital in the organization: fixed capital and working capital. Here I will discuss about the working capital. Working capital is the concept which is used in operation purpose or the regular working purpose of the organization or of the company. Working capital is the capital which is required for the regular operations, which is required for the day-to-day operations, which is required for the expensing the regular activity, like company has to pay to the employees, company has to pay to the labor, company has to buy the goods or for the operation or for the production purpose, company has to pay like electricity bill and stationery expense. These kind of expense are the regular expense which is done in organization. So these kind of expenses are counted in, are paid by the working capital. This capital is collected by the the most important thing, from where you can get this kind of capital. So the important source of this capital is profit only, which is internal source, and where the company doesn't need to pay any kind of cost to anyone, because company is generating the profit. If the company is generating profit, so there is no cost for that. Means company doesn't need to pay interest on that. If the company will take the short term loan from the bank, so company has to pay interest on that. But in other side, if the company is having the sufficient profit for the next operation, for the next production, so the company doesn't need to pay any cost on that. So that is the important thing. So the best internal source for the working capital is the profit of the company, and company can collect the fund for working capital from the different sources like commercial papers, notes, certificates and short term bank loans. So these are the like this capital is collected by the company for the short term purpose only, because company has to pay the regular expense by this. So the working capital is very important for any organization to run the operation. For a smooth running of the operation, it should not be excess and it should not be very less. Next concept is capital structure. Capital structure is made up of debt and equity. Actually, this kind of capital is collected by the company for the establishment purpose, or the purpose of collecting this kind of capital means long term purpose is basically company is considered when the company has to raise the fund for the long term purpose. So that makes the capital structure of the company. And the main sources are equity shares, reserves, surpluses, preference capital, loans and debentures. The main two sources are considered while when you will just see the capital structure of any company. The main two sources are debentures and equity. In few companies you will just see the equity shares only and bank loans. So depends on the company choices or convenience or other factors, company will select either debt, debentures or equity or preference or bank loan. So it varies company to company. Capital structure varies company to company. Third important term, financial statements. These are the written documents which convey the business activities, which convey the business financial position of the company, financial performance of the company, what are the liabilities of the company, what are the assets of the companies. And these statements are mandatory to prepare. Why? Because the government has to check that. These often audited by the government agencies, auditors basically, accountants firms, to check the or to ensure the accuracy and for the tax purpose, for financing purpose. Whenever the bank has to give the loan, the bank will see your financial statement. When the government will check the tax liability, the auditor will check your records, financial statements. And when investor has to invest in a certain company, they'll see your statement, they'll see your financial statement like balance sheet. Name of some documents are balance sheet, cash flow statement, income statement. Now the next concept is capital budgeting. Whenever the company has to decide what amount and in which business company has to invest the amount, company has to incur the capital. Suppose company has to purchase a fixed assets, so that company should decide either the company should buy the A asset or the B asset. Both are the fixed assets and the company has to select either the A assets or the B assets. Company cannot buy both the assets, company has to select only one. So company will go with the A asset, so that means company is taking the capital budgeting decision in which asset company has to invest. So whenever the company has to invest in long term, so that is known as the capital budgeting decision. It is the process of rejecting and selecting a certain project, certain asset, or certain product. Means this process is very important in organization, where the company has to decide which project or which business company has to select for the operation purpose, for the investment purpose, or which and other has to be sacrificed by the company. Now the next important term, capital market. And it is important because the company has to collect the fund from the, as I told you, from the shares, from the debentures, from the bonds. So the capital market is a place where the buyers and sellers indulge in buying and selling of financial securities like bonds, stocks. And the important is concept, why it is important, because when the company has to collect the fund, so the initially company will collect the fund from the primary market with the help of primary market, that is IPOs, initial public offer. A company can collect the fund through initial public offer. And secondary market is also there for the buying and selling of the existing securities. So the capital market is a place where the investors can invest their money, where the company can collect the fund from the market, from the public. So that is very important for any capital market is very important, and it trades mostly in long term securities. Now the next concept is CVPA analysis, cost volume profit analysis. Cost volume profit analysis, it is the important for any organization, because whenever they are investing, whenever the investor invests the money, they need to see what the cost is there, how much quantity is produced by the company, what is the profit generated by the company, and how it should be analyzed. So it can be done by the BP only, break even point. Break even point is a point where the company will not have any kind of profit. Company's total cost and total revenue both are equal. It is the point of a new product is the level of production and sales at which cost revenue are exactly equal. Means that points indicates if you will increase single unit above this quantity, above this volume, you will have the profit. If you will decrease single unit by this much of quantity, you will have the loss. You will have to face the loss. So it is the decision making. It helps in decision making. Either you have to increase the production and what quantity you have, minimum what quantity you have to produce, and how much you have to increase. When you will increase number of units, your profit will also go up. So that is important for deciding or making the financial strategy or decision about the cost and the volume of the certain product. So it is very important concept for the production purpose. So thank you so much. In next video we will discuss some other concepts of the financial management. Thank you.